Hello and welcome to a cmsfx daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, August 26, 2010. Today's session saw the greenback weakening as a raft of recent disappointing U.S. data has raised speculation that the Federal Reserve will take further action to prop up the U.S. economy. Weak durable goods orders and a record low number of new home sales yesterday followed a sharp plunge in existing home sales on Tuesday. Though today's jobless claims data was slightly better than expected, with claims falling to 473,000 for the week ending August 21st, expectations are building that the Fed may have to announce new further quantitative easing steps. Fed Chairman Bernanke is due to give a speech on Friday as part of the Jackson Hole Symposium, and traders will be hanging on every nuance of his speech for clues. We will also get the second version of second quarter GDP data, where it is expected to see a sharp downward revision. Let's take a look at our main currency pair, the euro-dollar, and as I mentioned, we saw the dollar weakening in today's trading, first overnight and then again in the New York session. The euro-dollar pair managed to rally past the 1.2730.50 level, which we had outlined as an important level of resistance. With several higher lows setting up, we had a bit of an ascending triangle pattern building. But now that we've broken this resistance trend line, we may be looking more at an upward sloping channel instead. If we're able to push above this 200 period simple moving average in the 1 hour time frame, it'll be another bullish sign for this pair. Now, stocks in Europe were up, and there was a pretty good report about private lending from the Eurozone as well, helping to boost Eurozone stocks. In addition to worries about the US economy pressuring the US dollar, we did have stronger stocks in the US, which helped weaken the demand for the greenback as a safe haven as well. Taking a look at that Eurozone data, loans to the private sector rose 0.9% from a year earlier after growing at an annual 0.5% in June. That's the strongest increase since June of 2009. Loans to companies remain negative, down 1.3% over the year compared to a fall of 1.6% in June, but it's moving in the right direction. Loans to households rose 2.8% in July, unchanged from the previous month, with loans for house purchase accelerating to 3.5%. In the same report, we also got data on M3 money supply, which the ECB uses as a gauge of future inflation, and we saw an increase in an annual 0.2% in July, which was the same rate recorded in the previous month, which had been the first positive reading in 9 months. Still, the July reading was slightly lower than forecasts. If we take a look at the pound-dollar pair, following a dip past an important support level at 1.5450, here, we see that we've rebounded and we've pushed back above that level and back into this sort of downward sloping channel we had set up the previous few weeks. Now we've met the resistance of that downward sloping resistance of that upward channel, currently at the 1.5580 level. We did move above the 200 period moving average, and we see that the next level to the upside will be the 1.57 level. In the UK, we did have also a strong release in terms of retail sales, which was a positive sign for the UK economy. The Confederation of British Industry released its measure of retail sales, and we saw the net balance up 35 in August, up from positive 33 in July, and much better than the median forecast of a 23 increase. So, positive data from both Europe and the UK helped European stocks to rally, which did increase the sense of risk appetite, or at least dampen the demand for dollars and yen as safe havens during the European session, and that sense of risk appetite increased in the New York trading session. If we look at the pound yen, for instance, we see a similar story to the pound dollar in that we had a very sharp slide, though here it was actually even sharper, in favor of the yen to start the week. But the last few sessions have seen the pound pair those losses, though now we come to test the old level of support turn resistance at the 132 level. So we'll see if we're able to push above this in the rest of the week, and then we come close to Then we will come close to testing the 200 period moving average, so they might line up actually at the same place at the 132 level. Higher yielding currencies tied to global growth, like the Australian dollar, also gained modestly against the US dollar in today's session. The Australian dollar-US dollar pair also pushed below an important level of support at 0.8850, but like we've seen in the other few pairs, we've now managed to move back above that level and test here the downward sloping resistance trend line set up for throughout most of August. We'll see if this move against the greenback prevails, as today's action does have some sense of risk appetite behind it, as US stocks did trade higher in the early New York trading, but this could be more dollar weakness showing up during a lull in between bad news. Now the Aussie gained despite some weaker data coming from the country. Private sector capital expenditure, or the investment in factories and machinery by businesses, fell 4% in the second quarter. This followed a 1% decline in the first quarter and was far shy of expectations of a modest gain. Looking at a second commodity and growth-linked currency pair, the US dollar Canadian dollar, we have a similar story. Though here the move in favor of the greenback started in late New York trading in yesterday's session. In today's trading, we pushed below our support at 1.0580, which for this pair made the start of a double top pattern, as we rejected at the 1.0680 level twice in the last two sessions. Oil was up 1.23% as of 11 a.m. Eastern, and with risk appetite increasing in New York trading, we see the pair moving further in favor of the Canadian dollar. The next level of support then would come at the 1.05 level, our level of resistance that was broken last week. Now let's take a look at the upcoming fundamental docket. Tonight, Japan posts a slew of releases to end the month, including household spending, unemployment rate, and measures of inflation. Overnight, Germany posts its preliminary CPI reading, and the UK posts a revised version of second quarter GDP, as well as preliminary reading on business investment. In the North American session, we get the second version of second quarter GDP, and as I mentioned, we are expected to see the annualized rate revised lower to 1.5% from 2.4% in the advanced version. Also on tap will be the UMich consumer sentiment, the final version for August, as well as Fed Chairman Bernanke's speech at the Jackson Hole Symposium. And that will wrap up today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching today's video and wish you good trading.